companies are scrambling to address global supply chains upended by tariffs. Businesses across a slew of sectors have had to adjust, reroute, or even cancel shipments. Our next guest co-founded a startup that aims to help companies navigate logistics and deliver products to consumers. This is a service that has seen demand soar in uncertain times. Stored recently raised $200 million at a $1.5 billion valuation and acquired a UPS subsidiary, further increasing its national footprint. Joining us here on set is Sean Henry, Stored co-founder and CEO. Sean, welcome. It's great to have you here. And I want to start right there because uncertainty for the supply chain has meant certainty for demand for the types of services that you offer. What are you seeing right now? Absolutely.
Well, the last few years has brought a lot of uncertainty to brands, from the pandemic to wars to strikes across Canada Post, UPS, and other domestic last-mile parcel providers, rising Facebook ad costs, and more. And so e-commerce brands have just faced so much change that the one promise they have is that change is constant. And so when there's a platform like Store that's really a commerce enablement platform, leveling the playing field with Prime, we give them flexibility to be nimble across the network where they have to move their inventory to meet consumer demands, but also not to have to do it on their own. We combine almost $10 billion in commerce and translate those economies of scale down to each of these independent brands so that they can combat disruptions as part of one broader network rather than as a standalone business.
Yeah, and you're doing fast delivery for a lot of what I will call the upstart, fast-growing private consumer brands, direct-to-consumer brands as well. So just in terms of the conversations and the dynamics and what you're seeing across some of those customers with what is a rapidly evolving tariff environment.
Absolutely. We support today's leading blue chip brands. You can think of our customers as the brands like the Athletic Greens and Natives and Tulas and Proactives of the world. These are great companies that are leaders of their category, and they want that best-in-class consumer experience. And companies of all sizes are being subject to these changes. And what they ultimately have to do is be able to move rapidly, whether that's reshoring their manufacturing, moving their fulfillment infrastructure. The biggest change we've seen over the last few months has been since the Mexican president signed away a lot of the import benefits for enabling the de minimis and Section 321 fulfillment and IMEX coming into the U.S. And so all of a sudden, there's been no reason to hold your inventory internationally in Mexico and Canada and Europe and China and have these long, slow shipments coming into the U.S., right, which is where almost $75 billion of commerce avoided import taxes last year by being shipped internationally. And so that's been the boon coming in.
This tariff shock right now reminds me a bit of the pandemic, and I wonder, what are the overbuilds or overinvestments happening now in the first half of this year in reaction to some of these moves that operators and maybe investors are going to have to digest and pay for later?
Absolutely. Stored ourselves grew about 10x just in 1 year at the start of COVID because you had to build up so much inventory to try to avoid all these disruptions. And you're seeing a similar pattern right now where there's essentially been an artificial bump in April between consumers trying to spend in advance and saying, well, maybe I'll buy this product before the price goes up. And we got a lot of questions about, okay, are you seeing pressure in the consumer? Are you seeing less spending? We actually saw more spending over the last month or two because they're trying to avoid what's coming. And for brands, it's an inventory buildup. And what we saw during the pandemic, there's some famous stories of ordering far too much inventory and then getting into a challenge afterwards when you can't actually sell it all through and liquidate it. And I think that is maybe what brands are worried about right now. They're all pulling forward inventory, trying to bring it in before August, and some of these other tariffs now take effect after this new 90-day pause. And if it's a predictable product, you're a few SKU business and you have a lot of demand and you're just building up 1 or 2 months ahead, you're probably okay. But if you're a large retailer and you have thousands and thousands of SKUs in your network and you're trying to build up months or quarters in advance, that's where the biggest fears and the biggest shocks are. And frankly, there's really no demand planning system, algorithms, or more that can help you. It's more of an art than a science.